I'm now joined by David Blanchflower, Professor of Economics at Dartmouth College. Thank you very much indeed for joining us today.
Good to see you.
And you. Let's just begin with a look at these figures. You know, we've been boosted by the idea, by the ADP figure coming out so strongly. Are you expecting a very good figure today?
Well, I'm expecting a better figure. I'm not sure I'm going to expect a record figure. It's helped, of course, that the Congress put through a package, put through payroll tax cuts, but we're going to see variation month by month, and it's going to be a long haul to get unemployment down. So, yeah, we may see something this month, quite good numbers, but the suspicion is next month things will continue to be variable, if you like. The worry still is private sector job creation can't make up for much of the public sector job destruction that's still going on.
Indeed. I mean, and there is this idea that there is a mismatch, isn't there, between the jobs that are being created and the people who are unemployed, the idea that you're getting a structural unemployed.
Yes, yes. I mean, that's true in many countries around the world. I mean, the logic to think in many ways that your story didn't quite get to this. The big collapse in the housing market means that there's lots of unemployed plumbers and carpenters and roofers and so on. And it's not obvious where regionally they go and occupationally they go. So, yes, a big story of mismatch. There are jobs and there are vacancies, but the people aren't in the right places. And in the US, there's this big problem with the housing market. So mobility of the US working population is somewhat restricted because of the problems in the housing market.
And you met with the Fed back in October to talk about the idea of job creation. One of the problems that came out, that was highlighted, I think, at that meeting was the idea that small firms were having problems growing because of credit, because of bank loans. Has any of that improved?
Well, I would say that the focus really these days of the Fed and the discussions that I had was really about jobs, jobs and jobs. And especially if you think of what can the Fed do, the Fed can obviously try and focus on helping small firms. But if you look in the UK and in the US, access to credit for those at the low end is very restricted. Big firms can issue bonds and so on, but access to credit amongst small firms, and particularly the US amongst minority-owned firms, is a big problem. Banks still aren't lending enough, and that's going to inhibit creation of jobs down the road.
Now, the UK has a very different outlook in some respects, but in terms of jobs, I mean, you could almost be talking about the UK here, because we've got the same issue, that we've got public sector cuts, and the idea is that somehow the private sector is going to absorb all these jobs. Do you think that's unrealistic? Well,
I think it's the economics of cloud cuckoo land, much of what the government's been saying. I mean, the data this month are really kind of illustrative. So what you had this month in the rolling quarter was job destruction in the public sector around 33,000, and private sector job creation exactly zilch, zero, nil, nothing. And so the worry is down the road, the government's destroying all these jobs in the public sector. How's the private sector going to step in? Actually, when banks still are not lending, no access to credit, small firms, well, and the worry for the small firms and all firms is the consumer going to spend? And it certainly looks like, sitting in Southampton today, where the local council just announced it's going to have job cuts, people are worried about spending things with this VAT increase coming. So this looks like very much like wishful thinking. Hopefully in 6 months we're not going to be sitting here watching big increases in unemployment, but I bet we are. Now,
you talked briefly about that data that's coming. It's been fairly negative. Do you think this may be the beginning of a sort of a slew of more negative data that we're going to see coming out of the UK?
Well, I think we will. I mean, if you look from the moment this coalition came into power, what happened to the data? Well, a number of things. Consumer confidence has collapsed. Business confidence has now collapsed back to levels that were comparable in the depth of the recession. The PMIs for services yesterday were awful, showing that growth is slowing. Unemployment increasing again, and house prices started to fall. So all the talk by David Cameron and Osborne saying, we're going to create a dynamic economy, the data are not consistent with that. The data look like the economy's slowing, and then you put on top of that a VAT increase. This does not look good. This looks like unemployment's going to rise. This looks like exactly the wrong thing to be doing. Economy going downwards, not up.
Do you see unemployment passing the 3 million mark this year?
Well, that's obviously the worry. It's certainly path dependent if this government keeps on down that road. I think the first trigger will actually be the million mark for the young. We're at about 943,000.
Yeah.
Biggest number we've seen ever. This is the number that the Yvette Cooper and the Labour government really targeted. I think the first thing will be unemployment amongst the young will hit 1 million. And then the worry is, are we going to get another 500,000 or so unemployed? It really depends. If the government insists and keeps on going and creates and cuts jobs very quickly, then I certainly could see us hitting 3 million this year.
Now, we've got an interest rate issue here because inflation is rising in the UK. You favour keeping interest rates low, basically whatever happens to inflation, do you?
Well, let's just think about the conversation we've just had about where the economy is going. I mean, okay, essentially now, if the Bank of England was to start raising rates, let's think about those folks on trackers. The folks on trackers will suddenly having to be paying more. This will force down house prices even further. I think if the Bank of England starts to raise rates in 2011, that would be George Osborne's worst nightmare. We have to allow inflation to rise for a while. We have to keep interest rates really low, because once you start to do that, that's going to have a real kick down for house prices and probably for consumption as well. So, and there's a letter in the FT today saying exactly the same thing. We're probably going to need a dose of inflation for a while. The MPC has to sit on its hands.
Now, perhaps one of the major themes for 2011 is still going to be this idea of the sovereign debt worries throughout Europe, and indeed the contagion that could have. George Osborne has been talking about that. Let's just listen to what he's had to say.
Well, I think in the next couple of months we need to see the permanent mechanism put in place, agreed on, and that needs to underpin confidence in the Eurozone. I don't think we want to go through another year of waiting for different countries to have different problems.
Now, Danny, I know you don't agree with him with a lot of what he says about the British economy, but in terms of the plan for Europe, what do you think?
Well, obviously, I think we need to get a plan together. I mean, Osborne's quite right to say that, and we'd all like to see that happen. The question is, will it really happen? Will he contribute to it? And it's really important for Britain, actually, that it can carry on exporting. I'm very worried about what happens in the euro area, whether Greece and Portugal and Ireland can really kind of continue to go and not have to default on that date. My big worry is actually Spain. So I think, yes, we have to put these things in place, but what we've seen so far is too little too late. The only time these European authorities act is very close to a crisis. So the markets have worked out the only way you'll get action is to exacerbate a crisis. So I think Osborne's right to say that, but I think the chances of it kind of going away peacefully and quietly in this next year are slim, and I think you and I will be talking about this many times over the next year.
David, I think you could be right on that one. Thank you very much indeed for joining us.
Sure.